If you are trading ICT but not considering the liquidity, then you are trading like everyone else. In fact, the market is moved by the big boys, the institutional trader that combines liquidity with any of the strategy that they uses. Now, as you know that all my strategy, either SMC or ICT, I integrate the liquidity to give me the best result possible, because when the market grab the liquidity, it take off for the bigger move. Today I'm gonna show you in this video how to integrate liquidity with the ICT. How you can identify best trade possible in the market using the ICT methodology, and you can integrate liquidity to stay at the top to find the best trade possible in the market. This is going to be a very important lesson, guys and girls, so make sure that you stick till the end. Not only this, there is a huge giveaway at the end of this video, so make sure that you stick till the end of this session. Before I begin, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. So without further delay, let's get started. Okay guys, so let me explain to you now how you can apply the ICT along with the liquidity, guys and girls. Take notes and also make sure you stick till the end. So first of all, what we need to find a sessions candle or a daily candle in the direction of the trend. I will be also showing you in the chart how you can identify this. First, let me explain the concept and theory behind it. So first of all, I will be explaining how you will be doing with the daily, and then also we'll be looking at the 4-hour price action, how you can do that too. So if you look at, first of all, daily candle, let's say once you saw the daily open during the Asian session and the major direction of the trend is up, so what you need to do, you need to allow the price to move in the direction of the trend whole first Asian session and Tokyo session, even in the London session. At least you need to allow 2 sessions the price to move in the direction of the major trend. Keep in mind, this is the key. You need to wait for at least 2 sessions the price to move in the direction. Now sometime you'll see that the market didn't move much in the Asian session or in the Tokyo session. Then what you need to do is that day you need to avoid that candle. So how do you identify that how much move you should consider? To understand it, you can place your ATR indicator. So if you place the ATR indicator, make sure that you see at least 1 ATR or more movement happen on the same session or with the same day. So I will show you on the chart how you can read that ATR indicator. For example, if you look at the indicator, it's now if you look at the indicator, you can see that this on the day the price moved 20 pip according to the indicator. Now you need to wait for the price to move on the same day at least 20 pip or more before it return back. Now once you see the market has made the move in the first 1 or 2 sessions, what you need to do is for the price to return back to the daily open or close or even the daily low. If the market do something like that and then has gone back up in the first 2 sessions, you'll see that in majority of the time after the London session or before the NY session, the market will return back to its original place, leaving a long wick at the top. That's the key. So once you see the price or hitting that daily opening and closing, or the price is hitting the daily low, the next thing is to wait for the price to grab liquidity. That is where the missing piece of the puzzle. Many trader cannot understand that why they should be trading, because at any point you could see that the market is just breaking down again and dropping down further or just getting a reversal. So how do you know that this market high probability that it's gonna bounce back up to the direction of the major trend is from the liquidity? Now you need to identify that the market has grabbed liquidity either from the daily low that has created in the first two sessions, or the market just grabbed the liquidity from the daily low and then form that price action confirmation. How do you identify the liquidity is from the price action confirmation? Because liquidity cannot be seen, like you cannot see the wind, but only you can understand from the leaf are moving from the identifying the wind. So you cannot identify the wind without seeing that something is moving due to the wind. Similarly, when you look at the price action confirmation, you can see that the liquidity has grabbed, and that is where we will be looking at. Now if you trading on the 4-hour, exactly the same concept is applied. You need to wait for the price to either to test the low of the sessions when it is moving to the upside, or the other way around for a bearish move. Or if you see that the market didn't grab the liquidity from that candle's low, then if you can look at the previous candle. Now the same concept is applied on the 4-hour as well. So we need to wait for a candle to move in the major direction of the trend for at least 1 ATR or more, and then we need to see the market has dropped back down well below, grab the liquidity on the same session on the lower time frame. So if you look at the higher time frame on the daily, then you need to look for the liquidity grab on the lower time frames, where it's come down to the multi time frame approach. So now let me show you on the chart how you can find this kind of setup. Guys, this cannot be back tested as it is a real-time information. When the candle closed, you'll see only a closed candle. So make sure that you stick till then to see how it works. Okay, so let's begin. First of all, let's look at the GBP JPY. I will be looking at the daily chart and we'll see how the market is gathering liquidity on the lower time frame based on the ICT methodology. Now if we look at the daily candle, let's first of all look at this candle here on the daily time frame. This is the daily bullish candle. Right now, as I mentioned, you cannot back test it because when the candle closed, you cannot see what happened during the lifetime of that candle. Okay guys, so in the meantime, if you want to join a regulated broker, you can find a link below this video in the description area. You can start trading with a regulated broker, and they even accept a minimum capital to start with. So you can start trading with a regulated broker with the minimum capital possible. So with that said, let's jump back to again our lesson. So that is why it is so important to see how the market does during that time. So this is the daily candle. Now let's replay the chart from the starting of this candle. Now this is the doji. Once this candle closed, there is a new candle open, right? So just here. Now let's jump onto the 15-minute chart to see how the market did. Now this is the level where the price closed a daily candle as a doji, right? So this the daily doji that we see like that here. Now after that, what happened? Let's look at. Now we can see that the market is just consolidating, has broken to the upside, and you can see the market made a big move to the upside. If you look at from here, this is where we have seen that daily candle open, and this is almost half the day. The price has moved well above this level. This is where the market almost has come down nearly to the London session from Asian session. Now we marked out that daily level. This is the level that we have seen the market has opened as a new candle. Now because the market has made a significant movement, if you look at the daily price action, daily ATR, this definitely more than 1 ATR. If you look at how many pip move happened here in this market, almost 50 pip, the market already made a move. That means that it's almost there. Now what we need to see here for the price to drop down again to the near to the daily support level and to grab that liquidity. So let's see what happened. Now you can see the market has gone up and then started to, this is where the trading secret, guys. You can see that after making a big move on the same day, the market, the major direction of the trend in this market is up. As you can see, it's an uptrending market. And what did you saw here? This is the thing that you need to pay attention when you are trading. It's not about the head and shoulder. Many trader might see a head and shoulder in that area. It's not about the head and shoulder. It's about how the market breaking down in the direction of the trend or opposite direction of the trend. Now what did you saw from here? That the market from this level has got a strong rejection in the support level. Now see how this candle has closed, and you know that this is the zone where there is a daily opening, and this is the order block. You can see that this is the previous resistance here, turning support here, and the market has dropped back down, tested the order block, and then we can see that the market has taken off to the upside with a bigger momentum. So you have understood that the market has broken initially to the upside, and let's see how the market has again broken down. This is the pure liquidity grab. Now understanding liquidity grab will set you free, because when you understand the liquidity grab, you know that you are trading with the big money. Now let's see another example on the intraday time frame so that you can understand this concept and apply straight away. Okay guys, so now let's see on GBP JPY on the 4-hour time frame. Now I'm replaying the chart so that you understand it clearly. Now what you can see here, that there is a big move happen on GBP JPY. Now with that move, the market slowly has come down for a pullback, and from that level we have seen that there is a huge move happen. Now this is the sessions candle that you can consider, because it has moved almost a big move, almost more than 2 ATR move already happened on that candle. Now what we need to see, the sessions low on that candle. Now if you look at the sessions low, you can identify that sessions low, see how the market reacted to that level. Once you saw the market has come down, tested that level, and if you look at the 5 minutes or 15 minutes time frame, you see how the price is reacting to that level. If you closely look at, you see the market has penetrated exactly to this support level. See how the price did that, as this is a significant level of support. If you go back to the 4-hour, you can see that this is where the market has invaded, penetrated that huge bullish candle, because in the past the market, the buyers were interested to buy from that level, and this is the candle. Just the previous sessions, the market just has broken that low. There is a high chance that the price will have another rejection, and it did that. You can see that from that level the bulls has taken control over the market, and the market has made a huge move to the upside. Now if you closely look at this zone, if you are watched our live session, probably you have seen that we had a very good trade from here, and from that zone you can see the market has made a big move. Again, it's just trending in the direction of the major trend. Now by understanding it, you can pick the best trade possible in the market and hold it for bigger profit target. I strongly believe that, guys and girls, you enjoyed this, a very important ICT along with the liquidity. If you have any question, don't hesitate to ask me using the comment section. Now, in addition to that, I'm trading this strategy day in, day out, every single day, making money from the market along with many with our members in Forex Trading Wizard Academy. If you want to apply the strategy with me to trade in the live market, there's a special giveaway coupon of $200 you can find below this video in the description. So this is only for the limited number of people who want to trade ICT along with the liquidity with me. Only for those, only for limited number of people. You can use that coupon before it is getting expired. With that said, thank you very much, and I'll see you very soon trading live.